Hey, good morning, everybody. Good morning. Hey, Cab, Safia, nice to see ya. How you guys doing? Feeling good? Happy Christmas, Thanksgiving Eve. Which Eve is it? It's Thanksgiving Eve. Can you guys hear me okay? Am I coming through loud and clear? I hope. You guys ready to have some fun today? I love the day before holidays because it means we get to sit around and just BS a lot, right? We'll wait for trades to set up for sure, and we'll see what we can do. But holiday trading can be a little odd, right? Holiday trading can be a little sideways sometimes. So don't feel like you have to be in a hurry to do something, guys. Patience is big. Gary was nice enough to give us a whole bunch of pictures. So we're going to do a lot of chart reading today. Your favorite is Christmas Eve Eve, the 23rd? And now I'm curious, why? Grab a Bloody Mary and be cool. Yeah, there you go. I wish I liked Bloody Marys. They always look delicious, just like saying it. Have you guys seen those Bloody Mary places? Hey, Jim, they put like sausage and brisket and half a pizza and 18 shrimp and everything's wrapped in bacon and it all sits on top of a glass. It's like brunch with a vodka twist at the end. I've eaten a few Bloody Marys. I just avoid the actual drink. I just don't like them. Never have. But that's okay. All right, guys. So I don't know. Let's see what we're gonna do today. There's gonna be, we'll see how many people show up. Um, there we go. I'm trying to get my screen a little smaller. We'll start with news, guys. If you if you were watching this morning, news made 8:30 a.m. All the unemployment claims, core durable goods. There was a big bump and jump in the market. Crude oil didn't budge. Crude oil had already gone crazy. But the Nasdaq went pretty sideways for a minute. It moved fast, and it was pretty much untradeable. It was too fast to catch a pattern. So you had to calm down and wait for things to fall back into line. Every morning I check for news. Every morning I'm looking at forexfactory.com/calendar. And I say this every day. I'm gonna say it again today. I don't trade news. I don't look at the news release and go, oh my gosh, unemployment claims. I'm going to make a decision based on what the report says. This isn't trading places. I'm not Winthorpe. I don't need orange juice reports. But what I do know is that when there's a big red box next to unemployment claims, that it has the potential to move the market. It has the potential to make it jump, bump, spike, stuff like that for $1. Phil's with me. Um, we've gotten through the 8:30 news. Everything's cool there. But at 10 a.m., I've got the revised UOM consumer sentiment. And again, guys, it's irrelevant to me what the sentiment is. But what's important to me is that I know that it can be a market mover. So I always write a note. Oh, it is a thing. It is very much a commodity. We should all have trading places day. I'm going to build charts. It'll be fun. Um, but at 10 a.m., guys, I need to make sure that I'm not in the way of that freight train, right? Getting to the point to where I can get run over. Hey, Safia, congratulations. Me too. I was done before we ever got to class today. Crude oil was giving very much today. Unfortunately, I took my first NASDAQ trade on Sim, waking up, or I would have been well over goal. It's nice, isn't it? Have a great Thanksgiving, Safia. Cook something delicious. Um, and we'll see you Monday. You were done before Gary got up. Nobody's done before Gary gets up. He doesn't sleep. He doesn't sleep. So, guys, every morning we're checking it, we're looking at it, we're making sure that there's no news, nothing coming out that's going to disrupt our worlds. And I think that it's important that you focus on that every day. Don't put yourself in front of that freight train of emotion. So 10 a.m., guys, write it down on a piece of paper, set an alarm with Siri, whatever it takes to make sure that you remember. what's going on, that's coming. And then here we go. Orange juice futures. Apparently it was a bad report because a pivot stop out at resistance has pushed it all the way down to a divergence low. Pretty cool, right? Guys, there is your trading places, and all of our patterns work. Bad bottom to a mid band, higher divergence to resistance, higher divergence sets the tone for up. Everything breaks resistance, it behaves as support, pulls back, goes right to a pivot, pulls back to the mid band, nothing budges, straight to resistance. Guys, this is what we're going to talk about today, but that is orange juice. That is OJ 124. Maybe a short opportunity somewhere in there. I just wanted to make that chart. I thought that was kind of funny. Um, so, guys, watching the news, right? Making sure that we don't jump in front of it. If you're trading one of those prop firms, they won't let you trade during news. They'll literally shut you down if you do it. And then everything that I talk about, guys, each and every day, it's coming from the tutorial section. There are no secrets. There's 1,000 ways to use the software. There's 1,000 ways to find a trade. There's 1,000 ways to make money when you become a chart reader, when you get good at reading your indicators. My focus is on the easiest way initially. And the easiest way is the high probability trend trade. The easiest way is a trade that really doesn't make you think too terribly much. And for me, that's a wonderful thing. It's a trade that only has three rules. These three rules, each one provides an advantage. And I find myself speaking in advantages, and I think that's not a bad way to go for a lot of people, is as I speak in terms of momentum, clear path, and an entry area. And I talk about that a lot because it's these three advantages that create a high probability trend trade. These three advantages happen on only two charts. We have such a small class today. That's okay. I'm going to do what I do. James Bird, welcome to the room. I see you snuck in there. Uh, Two charts are going to lead the way, guys. Your large chart, your slow chart, your broad stroke of a brush is going to define direction, momentum, and areas. It's always going to define direction, momentum, and areas. Um, and it's going to show the overall opinion of the market. This is a reflection of what the people in charge want to have happen. And if you stick with letting the large chart lead the way, it eliminates an awful lot of problems. Your first two rules, the one that gives you momentum and your second one that gives you a clear path, both happen on the large chart. And it's a slow crawl, guys. It's one bar identifying direction, one bar identifying momentum, one bar identifying areas. And when you have those first two rules met, you're going to come to a smaller, faster chart. You're going to refine that broad stroke of a brush, and you're going to be able to pinpoint where the market is likely to continue. So we're going to focus on a high probability trend trade first today, guys. This high probability trend trade, three rules, two charts. This is a chart or a trade that teaches you to read your indicators. Now I'm going to go to the tutorial section, and I'm going to remind you that 90% of your day, guys, can't stress this enough. 90% of your day is just reading indicators, waiting for these advantages to be present. And that 10% is what gets you into the market. The 10%, when the rules are met, when a statistical advantage is present, that's when you're getting into the market. And I'm going to tell you through experience, it's your ability to do absolutely nothing when there is nothing to do that's going to set the tone for your success, guys. Embrace the 90% rule. But once you get good at this high probability trend trade, once you understand the advantages, once you can locate them, you're going to be able to do some pretty cool stuff. You're going to understand where the market is likely to continue. And this becomes your entry point for that highest probability trend trade. You're going to understand where the market is likely to go. It's going to help you build profits. And you're going to understand where the market is likely to stop. And those likely to stop areas are the termination conditions. Gary, I'm not sure whoever your salesperson is. Reach out to them right now. I'm not sure. I'm removed from that. Um, I can tell you though, you're gonna love it. You're gonna freaking love it. I've been taking the I took the 5 days, just like you guys will with John. Um, so whoever your salesperson is, and I'll put a note in the room. I'm not sure who sold you software. But I'm going to put your comment in the room there so that they can see it. Someone will probably reach out to you. But you're going to love it. But these termination conditions, guys, we saw them and we see them everywhere. Termination conditions are these Fibonacci areas with the potential to stop the market. And this is a great example of resistance reached, the market bounces, support reached, and the market goes to the next key fib area, guys. This is everything that we do. Um, Even in these big runs up, they came from Fibonacci support. And you could see from support to resistance to support to resistance to support. You could see the consolidation overnight. And then once it breaks, look how cool this is. Resistance breaks and the market pulls back to it as support. One-to-ones break, the market pulls back to it as support. Resistance breaks, the market pulls back to it as support, and off it goes. And you're going to see this, guys, all day, every day. So recognizing these areas where the market is likely to stop creates this huge advantage for you. Because not only does it keep you out of trouble, but it behaves as an anchor. When the market reverses from one of these key areas, guys, it sets you up for the highest probability trend trade. It sets you up for that trade that typically wins 70 to 80% of the time. So we're going to focus on becoming chart readers today. You're going to do it with the high probability trend trade. And we're going to embrace, as we do every day, the path to getting to where you want to be ASAFP, guys. And it's two parts. It starts with posting in the room. Can't stress this enough. Post in the room, even if you think it's unimportant to anybody but you. Post in the room, because if it's important to you, it's important to me. I want to have a conversation about it. And every time you post in the room, check it out. I did it in color. Write your rules on the chart. Oh, and I cut it short. Dagnabbit it. Tell me why you did what you did, guys. Always tell me why you did what you did. So if you post in the room and you take a long, say, hey, Mark, this is why I took the long. This is what I saw. This is what was there. This is what wasn't there. And here is where I got in. Here's what I got, where I got into the market. Here's where I got out of the market. I don't think that's the one that I wanted. Yeah, it is. I put the wrong picture in there. That's okay. Tell me where you did it, why you did it, and every time you get into the market, revolve it around the advantages. And what you're going to find is that it becomes easier to repeat the things that bring you success. So post in the room and then track your performance in the spreadsheet. If you guys are using the spreadsheet, you understand the value of it. If you're not, you're going to realize the value of it when you start. This spreadsheet has helped me learn to not only become a high probability trend trader. The spreadsheet taught me how to recognize nuances in the NASDAQ. This spreadsheet's been helping me over the last 5 or 6 days as I study with my brother. And every day, all you do is you go back and you look at the trades. What worked? What didn't work? What made you feel comfortable? What made you nervous? And if you ask yourself these questions and you're filling this out and you're being honest with yourself, what you're going to find is patterns in the market that are bringing you success. But more importantly, you're going to find patterns in yourself. Good morning, Carl, that may be hindering you from success, guys. Because remember, we're talking about 3 rules. Everybody breaks one initially until they learn to trust it. There's always one rule that people can't get on board with and they fight it. And I don't know why this is, that it's just human nature. Momentum, a lot of people are really good with. Momentum's easy to recognize, but these termination conditions, guys, this is the Achilles heel of most traders. You know exactly where the market is likely to stop. You know exactly where the market is likely to reverse, where it can create an untradeable bounce, but people tend to trade right into them anyway because hope, right? I hope it breaks. I hope the market keeps going. So when you use this spreadsheet, when you post in the room, we're going to find out what your thing is. We're going to do it together. And then we're also together going to work through it. We're going to get you to that next level, get you to where you can recognize it, avoid it. Absolutely, Phil. and this will accelerate the learning, guys. We're going to take the next 30, 40 minutes. We're going to talk about the high probability trend trade. You guys, if you don't know them already, you're going to learn the trigger line and Fibonacci rules for when it's okay to trade. If you're brand new, we're going to create a foundation. We're going to create this very core base that you're going to grow from. Everything that I talk about isn't meant to be the end of the journey. This is the first step, guys. This class is designed to give you the first step, the basics. Make sure you're comfortable with these, and everything else tends to fall into place. I want you guys to simulate. You are using Monopoly money, guys. There is no financial risk on this demo. The software is 100% working software. It's provided for free. You've got NinjaTrader so that you can simulate it. You've got Monopoly money so that you can try everything and see what works for you. The idea is that you trade with advantages, that you trade with the correct rules, because what happens is luck tends to run out, especially right about the time you go live. So focus on having advantages in your trades. Post in the room. Let's make sure that they're present. And then we're going to simplify, guys. At first, it's the high probability trend trade. This is your 50 feet of concrete. Let's build a skyscraper on it. This is your foundation, guys. This is the one that teaches you to read your indicators, understanding where the market's likely to continue, likely to stop, likely to go. You've got to take pictures. Take pictures every day, whether it's a trade, whether it's somebody else's picture, whether it's just a chart that you're looking at. The more pictures you take, the quicker you're going to get to where you want to be. The more pictures you annotate, you are taking these advantages and you're piecing them together with words so that they come together. And you've got to use that spreadsheet as well, because the more pictures you take of a rules-based trade, the more opportunities you have to grind that into your brain, right? To burn it in, to etch it in, to make sure that when you're watching the live market, it becomes easy. You can say, I have odds favorable momentum. I don't have a clear path. Nothing looks right over here. I'm not taking that trade. And that's how quickly your analysis is going to play through. I don't have a clear path, nor do I have momentum. Awesome, Gary. You're going to love it. And this probably isn't my best chance for success. I'm trading directly into a termination condition without momentum, and look at the bounce coming up. That's how quickly your analysis is going to happen, guys. Obviously, I've been doing this a while. That's how quickly my analysis happens. But it comes from seeing the same pictures over and over and over again. And I'm telling you, you're going to get to a point where 3 to 4 seconds is all it takes to analyze your charts, to understand if your rules are met. And if you can't find your trade within 10 seconds, guys, it's probably not your trade. I had someone tell me that a long time ago. If it takes you more than 5 seconds to decide that it's time to pull the trigger, it's probably not time to pull the trigger. So without further ado, let's talk about a high probability trend trade, guys. Let's focus on strong triggers first. Strong triggers break things. They break areas. Strong triggers give you the advantage of momentum. Strong triggers can even cover up some mistakes now and then. And the cool thing is you can't have strong triggers without trading with the direction of the market. If the background is green on your large chart, we're in an uptrend. Look for longs. Go up. If the background is red, we're in a downtrend. Go down. Look for your rules to be met for high probability trend trade short. Guys, just never fighting the color. You're okay. So Walter, John Novak is offering a class. And I'll see if I can find a link to it. But John Novak is offering an advanced reading class. It's advanced. It takes this very basic foundation, and it's going to teach you to hold for bigger moves. It's going to teach you to recognize extra advantages. Everything that I teach is a foundation, and it's okay always to disrupt the flow. But what John's teaching is a little next level. Here we go right here. Let me copy the link. And it's actually what I've been doing for the last 5 days. So I was his guinea pig taking this classroom. But it's advanced reading. It's going through. It's only 5 people. It's one-on-one. It's continuous support coming through. Um, and I can tell you just having taken the class, because if I'm going to sit here and talk about it, I'm going to take it, right? So I've spent the last 5 days, 6 days on simulator. I've spent the last 6 days doing market replay, taking pictures, going through the exact education plan that you guys go through. And I think it's phenomenal. I think it's unbelievable. I've had the best 2 days in the last 2 days that I've had in a while. So, and it's all trading what he's taught. So it's pretty cool. Um, Read through it. If you have questions, just reach out to John or reach out to sales. Yeah, I love it. So, guys, go with the direction. It's easy. And then once you have the direction, look for those strong triggers, guys. Strong triggers mean that your small triggers, which are those solid lines, have broken above and away from the large trigger lines, which are those dash lines. And the two work together. They're just moving averages. I don't know how they come to be. I don't know what elfin magic creates them, but what I do know is that when the smalls are above the large and with a green background, when the space is created between the two, think of scissors open, ready to cut. When you have this look, you have strong triggers. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. We say it every day. Odds favorable momentum should lead the way. It is going to push that market. The people that control the market have put so much force behind it, it creates the separation, guys. And when you have this look, this is the best of the best look for buying Fibonacci support on a pullback on that smaller, faster chart. And then everything goes up, comes down. And guys, this is one of the beauties of what we do. We don't care if the market goes up or down. Let's make money both ways, right? But let's start with odds favorable momentum. So in a downtrend, when the background is red, your small triggers are below the large triggers. There is space, once again, like scissors, open, ready to cut. And this gap between the two lets me know that the odds are favorable for the market to continue up. And if we go back to the live market, larger up, smaller down, it can't be odds favorable momentum because they're not both wide in the direction of the trend. Smalls are down, larger flat, not my best momentum look. I want triggers that are wide and angled in the direction of the trend. And then my smalls are inside of, not outside of my trigger lines. Once again, not my best look. This is a loss of momentum. And look how the market pushes lower on that smaller, faster chart. Kind of cool, right? So you can recognize this. This is the best. This is odds favorable. This is when we're selling Fibonacci resistance and buying Fibonacci support on that smaller chart. And then the opposite of strong is weak. Weak triggers mean that the small triggers have broken inside of the large triggers. The large triggers have literally swallowed them. The scissors have closed. When you have weak triggers, anything can happen up or down. You lose that advantage of momentum. Weak triggers, you're going to see preceding reversals. Weak triggers, you're going to see creating larger pushbacks. Weak triggers are not a freight train of momentum going in the direction of the trade. And what you're going to find is that when the triggers weaken, you've given up the advantage of momentum. So here's my rule number one slide. I'm a big fan of this slide. It reminds you that it just doesn't happen all day, guys. Odds favorable. I've got a little gap and it pushes it down to those anything can happen triggers, those weakened triggers, and it precedes a reversal. Even without the advantage of Fibonacci on this chart, you can see that the slowdown reverses the market, creates odds favorable momentum, and there's one of those tails on the large chart. This tail or wick is a pullback on the smaller, faster chart. You guys are going to pinpoint right where that tail is most likely to happen. That's your best of the best look to push up with the trend. Until we weaken again, anything can happen. And when we have those anything can happen triggers, guys, who knows I don't know. But I do know that the market may push lower, and sure enough, it did. So much so that it gave me odds favorable momentum and another one of those tails, one of those potential entries. And it kept going. And my guess is right to Fibonacci support. Look how it stops on a dime. And then we get into the fight, guys. Then we get into what you guys never have to be in. Notice that the background is red, but the small triggers are green, and the background is green, but the triggers are red. And here there's just no agreement. And guys, I'm telling you right now, this is where buyers and sellers are duking it out. This is Tyson and Holyfield, and nobody's bid an ear yet. And you don't have to get caught in this. Wait for the momentum. Let them fight it out. Let them figure it out. Let the people with millions of dollars in their account make it move. Eventually, somebody's going to win and give you that odds favorable momentum. This is where people tend to predict the market. This is where people shake that magic 8 ball rather than waiting for advantages. And this is where people tend to give back an awful lot of money, hoping the market goes up because the background is green, even though the triggers are red, hoping the market goes down because the background is red, even though the triggers aren't providing momentum. So guys, rule number one is the beginning of your 90%, making sure that you have the advantage of momentum. Is everybody cool with that rule? It rhymes, so you know it's good. It's a cool rule, right? Um, Large chart needs strong trigger lines. You have the advantage of momentum. When you have the advantage of momentum, we have to make sure that we have a clear path. We have to make sure that there's absolutely nothing in the way that may stop the market, that may create a bounce. I'm going to tell you guys right now, fibs are where decisions are made. And I think that's one of my favorite phrases. And I can tell you right now, it absolutely changed the way I look at these lines on a market. Look at crude oil. Fibs are where decisions are made. Right here at this red Fibonacci, either buyers took profits or sellers pushed it lower. And they pushed it right to the next decision-making line, which brought it back to the decision-making spot, which brought it back to the decision-making spot. And look at the consolidation in the market between these two fibs, guys. This is that fight. This is buyers and sellers duking it out for supremacy. You can see it long before the market ever gets there. Crude oil was beautiful earlier. They're consolidating now. There's that huge fight from resistance to support, from support to resistance, back down to a next level of support, and the fight is on. So we're going to take a simple recipe so that you guys know when it's okay to trade into one of these areas and when you guys know when you should sit on your hands and do nothing. And we're going to use a simple recipe. The first thing that you're going to do is you're going to let price reach an area, guys. These price bars reach the areas. Remember, this is where decisions are made. So in order to set off the decision-making process, price gets to one of these lines. And when price gets to the line, when price gets to Fibonacci support, Fibonacci resistance, if none of your trigger lines break through, if they all remain below resistance, if they all remain above support, then you don't have a clear path. The area is not broken. It may reverse the market. It may create an untradeable bounce, or it may break. But as long as the triggers remain below resistance, above support, no trades, no clear path, guys. And this is your recipe. Price always reaches. But the trigger lines tell you whether or not there's a likelihood of it breaking. When both your small triggers and your large triggers get to the other side of an area, that's when we consider the area broken, and that's when the path becomes clear again. And you'll notice that small and large get to the other side, and you have odds favorable, and there's one of those little tails, one of those possible entries from an area that's broken and is now behaving as support. So no triggers, no trade, not a clear path. Sit on your hands, wait to see what happens. Both triggers, small and large, clear it. The path is clear, resistance becomes support. Guys, these are your two options in the beginning. And if you keep it simple, that clear path is going to pay huge dividends for you. This is the high probability trend trade. This is the scenario. It's either broken or it's not. Let's not overthink it. And of course, you guys are brilliant. You're going to move into a medium probability trade. And a medium probability trade means that there's an issue on the chart. It may be that an area hasn't broken. It may be that you don't have the best momentum. It may be that your entry point isn't the best entry point. But your first medium probability trade, guide, is what we call a 50-50 trade. And a 50-50 trade means that your small triggers have broken through the area, smashed through the area with odds favorable momentum. I can't stress this enough. If you don't have a giant gap between your smalls and large, the area is less likely to break. But with all of that momentum, the potential to break is there. But it's not broken yet, which means that it's not a clear path, which means that rule number 2 isn't met, which means that this becomes a medium probability scenario with the potential to break, not a high probability trend trade because the advantage of a clear path isn't present, which means that when you have this 50-50 look, you have to insist on momentum on both charts. And you have to insist on a tiny little entry area to give you the best of the best entry on your smaller, faster chart. And this becomes your first medium probability trade. And I'm going to give you a plan to take it in its most high probability scenario. But these are termination conditions, guys. It's a pretty simple recipe. It never changes. Termination conditions at a high, if price reaches the area and none of the triggers break, sit on your hands and do nothing. Wait for the reaction. And then the same is true at lows. If price reaches the area, absolutely no trigger lines break that low, that line at the low, sit on your hands and do nothing. You don't know what's going to happen. You don't know what the reaction's going to be. We don't have to bother predicting because predicting is what the people that are trading on hope do. So I'm going to go through the tops and bottoms section, guys, and we're just going to kind of run through it. Price reaches support, none of the triggers break, absolutely no trade. Guys, give me a why in the room, especially my newer users. Are you comfortable with this concept? When price reaches an area, it may stop it. It may reverse it. It may create an untradeable bounce. Your job is to do absolutely nothing and wait and see what that reaction is. Price reaches support up here. When the small and the large break through support, it behaves as resistance. The area is now broken. There's one of those tails with odds favorable momentum and all the triggers below. This is where you guys are getting into the market. This is what we're learning right now, is how to pinpoint right where that tail is most likely to be. Price pushes down, pushes back up, and it creates one of these divergence lines, guys. This divergence line is not a termination condition. It's a loss of momentum. When a cyan line prints from a low, it just means that the buyers stole the momentum from the sellers. This doesn't constitute a termination condition. Remember the recipe. When price pulls back and reaches that divergence low, all of the trigger lines remain above. Now it's a termination condition. We call this a pivot stop out or a PSO. You'll see it in the room a lot. And a pivot stop out can be a very powerful termination condition. The buyers put a line in the sand, and when the sellers retest it, they unload their guns on them. Look how the market goes up from this termination condition, full reversal. Guys, this is a strong bottom. This is the precursor for the highest probability trend trade long you can take. Those pivot stop outs are powerful. When you couple them with Fibonacci resistance, they become even more powerful. And this is a great example of sitting on your hands and letting the buyers and sellers fight it out. Resistance triggers below, don't go long. Support triggers above, don't go short. Mark, how on earth can I make money if I have to be this patient? Price pulls all the way back up to two forms of resistance and a divergence high line, creates a pivot stop out at Fibonacci resistance. The market reverses, gives you odd favorable momentum. We haven't reached support yet. There's one of those tails, guys. This is where your patience pays off. That becomes the highest probability trend trade entry that you could ever take. The trade that typically wins 70 to 80% of the time. But it's what you do or what you don't do when there's nothing to do that's going to determine just how much this trade puts into your account. If you're giving it away with hope, it becomes difficult to capitalize when all the advantages are present. And then this is the one that I'm going to vandalize a little bit. I'm going to draw some pictures on. Because this one really sums up the advantages and how they have to come together. When the market is pushing with odds favorable momentum, right? Everything is screaming to the downside. And then it runs into these yellow 1-to-1s. And none of the trigger lines are capable of breaking through. This is a huge red flag, guys. This is a neon sign blinking in the distance. No more short trades. You've reached an area that may stop the market. It may reverse the market. It may create an untradeable bounce. And there is your untradeable bounce. All the way up just about to the mid band. All of your trigger lines remain below resistance. There's no long trades. And the sellers fight back. And the buyers give it a push, and the sellers aren't into it. And the buyers finally take over. But they're not giving you anything yet. Both small and large triggers finally get above resistance. It behaves as support. Smalls are outside of the large. We have momentum. There's one of your tails, guys. This is your 90%. This is the 90% of doing nothing that gets you to the 10%, to that highest probability trend trade, to that trade that typically wins 70 to 80% of the time. And it's what you don't do when there's nothing to do, or what you do when there's nothing to do. Guys, that's what sets you up to get the most out of this trade, and that momentum carries you right to the next key Fibonacci area. This is termination conditions, guys, whether they're stopping the market and keeping you safe or setting you up for the highest probability trend trade. Take some time to go back on a large chart. Let's go back to a large chart. We'll get out of crude because crude's going nuts, right? Maybe crude is our best example. Price reaches the divergence low. The triggers don't break. That precedes the reversal. Sometimes the market turns from nowhere. There is a pattern on a smaller, faster chart. Let's go to 904. Oh, and it didn't happen there. Nope, there it is right there, 833. Let's see if we got some divergences on a smaller, faster chart. Just one. No worries. We're going to talk about one more termination condition where the smaller chart can give you a little bit of heads up when that market is likely to turn. And it uses that loss of momentum. It uses that loss of momentum where the buyers steal from the sellers, vice versa. Three divergences, three cyan lines from a low or magenta from a high can terminate the trend, guys, and it's nothing more than three losses of momentum. It becomes more powerful when your trigger lines go into that anything can happen stage, when they work their way inside of the large triggers. And it becomes more powerful still when your third pivot from a low is higher than the previous, or your third pivot from a high is lower than the previous, creating a head and shoulders pattern. You're going to see this look at a low or this look at a high when your large chart may have a clear path, but it turns anyway, where it has odds favorable momentum and a clear path, but it turns anyway. It's going to help you identify that change using a smaller, faster chart. It's also going to allow you to manage trades, guys. If you get in at the top of one of those tails, you're in the perfect short trade. If three divergences print, that's your indication. Hey, let's exit this trade. Let's get out of it. Let's preserve our equity and wait for the next best opportunity. And you'll find that these three divergences become very, very helpful as you learn to manage these great trades. So we've got momentum on the large chart. Leads the way, sets the tone. We've got a clear path on the large chart. We haven't reached any of those key areas. Decisions are not being made. The people that move the market, the large crowd, has given us an indication that this market is going up, that it's going up with momentum, and there's no reason for alarm because there's nothing to stop it. So this is where we turn our attention to the small chart, guys. This is where rule number 3 comes in. Rule number 3 says that we're going to use a limit order to buy or sell a pullback on a smaller, faster chart. We are going to use a limit order to buy or sell a pullback. That pullback is going to be to areas, and areas can be fibs, mid bands, or yellow 1-to-1s. But the key to this one, guys, the key to success on this one, keeping you the absolute best position, is that those areas fall inside of favorable large triggers. And favorable large triggers means that you're large and you're synthetic on your small chart. You've got two sets, one stepped, one smooth. These work together, one on top of the other, wide in the direction of the trend, to give you the smallest point where the market is likely to continue, the smallest window of opportunity. The tighter these are on top of one another, the smaller your area for entry becomes, the least amount of risk that you have on a trade. So we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And a pullback is nothing more than a tiny little retracement in price, but it's counter to the underlying trend. It's counter to the momentum going up. It's counter to that clear path. And this is what the small crowd does, guys. These little yahoos that want to fight everything. We're thankful for them because they push us back to the perfect entry. So when the large chart says up with a clear path, this is the look on your small chart. This is where you're making the decision that it's time to look for an entry. You're looking for your large, you're looking for your synthetic. They should be wide, angled in the direction of the trend, hopefully one on top of the other. And then you're going to look for the areas that are falling within, fibs, midbands, yellow one-to-ones. There's nothing to do yet. We still need that small crowd to do their thing, which means we need a pullback. We need a reversal bar on a smaller, faster chart. This reversal bar signifies the beginning of a pullback. So I'm going to create a window of opportunity. I'm going to look at my large and synthetic triggers. And I'm going to look for the areas that are falling within. Fibs, midbands, yellow one-to-ones. I want them inside of these triggers. These triggers are coming up like a shark about to breach. If I'm a tick above, it's probably going to get swallowed. Guys, from the highest point of support to the lowest point of support inside of favorable large triggers, I want you to embrace that phrase, is your window of opportunity. This is the point where the market is most likely to continue. You will activate a limit order at the top of that window, at the highest point of support, or if it's a short trade, at the absolute lowest point of resistance. And this becomes the entry for the highest probability trend trade. This is your best of the best. This is a trade that typically wins 70 to 80% of the time. And remember that the large chart led the way. The large chart had odds favorable momentum and a clear path. Your small chart graced you with a reversal bar, and at the time of that reversal bar, your job was to look from the highest point of the triggers to the lowest point of the triggers, overlapping, wide, strong in the direction of the trend. And this is where you're looking for areas. And then you looked for your highest point of support to your lowest point of support inside of favorable large triggers. And all you had to do is activate a limit order right at the top, because you know that this is where the best of the best happens. You know that this is a trade that typically wins 70 to 80% of the time. You know that this is a trade that creates confidence through the memory of success, and you're just focused on entries for your first 20 days. Because when that market comes back and hits your limit order, you're long with every advantage that we look for. But you've created a window, which means that that market may push to the bottom, to the lowest point of support, but you're still in the game. You still have momentum, a clear path, and you're still at the point where the market is likely to continue. This is where new users jump ship and they get scared and fearful, which is why we study this day in and day out to make sure that we're creating confidence. But you also understand very clearly where the market shouldn't go. And about 4 to 5 ticks outside of your window of opportunity, Nexgen users place a protective stop. This is saying that my advantage is no longer there. The market's not where it should continue. And this is where you have to build trust in the methodology, because anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's a cost of doing business, guys. This is your rent. This is your supplies, whatever you want to think of it as. But this is a normal part of a positive equity curve, guys. I don't think I've ever had a day where I didn't take losses. I don't think I've ever had a 100% day where I came out goals met. And you'll see it a lot. You'll see people making $1,000, $2,000, $3,000, and they may have $700 or $800 in losses on their way to that. And this is a part of it. But this is the setup. This is the setup that I want you to focus on for 20 days. This is the setup that I want you to really commit yourself to getting into the market at the best of the best spot, because this is a trade 70 to 80% of the time. This is your result. Typically, profit target reached. And great entries create manageable trades. Great entries get you into the market at the right spot. The right spot gives you the ability to minimize your risk. And you can use those tails on the large chart that we talked about to begin to study, to go back, to recognize. Because when the rules are met on the large chart, if you're scrolling historically and you see strong triggers and your path is clear and one of those tails is formed, circle it. And then go look on the smaller, faster chart. Did that circle show up at an area inside of favorable large triggers? If it did, this is your highest probability trend trade. This is your best of the best. This is the trade that you can go back and study 10 days on each chart that you have in your workspaces. And we don't trade tails. If you wait for the tail to form, the market is long gone. We use that refinement chart, that area of support inside of favorable large triggers. Guys, this is your study tool. This is how you're going to get to where you want to be. And what you're going to find, let's see, is when you have odds favorable, when everything says down, that's that area with the potential to break. Let's see what the circle looks like at 853. Sure enough, the market pulls right back to resistance right inside of favorable large triggers, and it becomes an opportunity. And we can do the same thing going the other way. When everything is up and screaming to the upside, I'll be darned, a pullback to support right inside of favorable large triggers. And guys, this repeats itself. Termination, full reversal. I can tell you right now, I was in that trade. It was a nice one. That's the one that finished my day for me. And if you scroll back, support becomes resistance. And this one missed me by about a tick because it happened so fast. But what did it look like? Pulls right back to resistance right inside of favorable large triggers. It just happened in a matter of seconds. Look at your timestamp, 8:05:11, 8:05:16. I had 4 seconds to get things in and I didn't get it. But this is how you're going to study, guys. This is how you're going to build trust. If you're wondering if you missed a move during the day, you can go back and you can look for strong triggers and see if there was an opportunity to catch something. Termination, full reversal. Notice that there's no tails. Sometimes it's just not your money, guys. That's it. High probability trend trade. Is everybody good with that? This is your foundation, guys. This is the one that gets you on the right path. This is the trade that you can use a checklist to enter, that you can use a checklist to police yourself. In this checklist, I'm telling you right now, I've never had anybody in the history of it do worse than 70%. I have had skeptical clients go back and back test it over a year. And their findings were like 84% winners when the conditions were met. When you mark yes to everything, your results may be different, but this is the one designed to get you into the market at the absolute best spot, guys. And there's your rules. If you can mark yes to all of them, you've got a statistical advantage. Here's the exact same one with pictures stolen from the user guide. I just dropped both of them in the room. There's your good top or bottom, termination that creates a full reversal. There's your momentum clearly defined so you never miss it. There's your recipe for termination conditions as well as when the path is clear. And then here you are finding your window of opportunity, guys. All of this is just there. Study it each morning before you start. And then finally this morning, I'm going to give you a plan. I'm going to give you a trading plan. This doesn't have to be your trading plan. You don't have to stick with it. You don't have to do this. There's no obligation. I never tell you what to do. But I can tell you that I've had people come in as brand new users and commit 100% to being able to check yes on these checklists and do about 75, 80%. It's hard to not make money at 75, 80%. And what most successful traders will tell you, that the more you deviate from your proven plan, the less likely you are to win. So this is designed to optimize your chances of success with the high probability trend trade and with that 50-50 trade. It is a stepping stone in your learning journey. It is not the end of the road for you if you don't want it to be, but this is the one that builds the foundation. This is the one that makes you a chart reader. And it's going to be through study, simulation, class feedback, and continuous practice. You're going to create your own plan. You're going to create a plan that's tailored to your personal goals, and it's going to be based on your own experience. It's going to be based on your ability to read the indicators. I can tell you that I traded this plan for years, and it's still a very core part of what I do. And I've only recently begun expanding beyond, looking for a few extra opportunities. But this one, guys, this is your best of the best. And it starts with never fight the large chart or direction. Never fight the large chart triggers. If you can eliminate that, you can eliminate probably 60% of the mistakes that the typical user makes as a new user. Define your entry. Give me 20 days. That's it. And guys, let me back up just a little bit. If you've been with me for a while, but you're not consistent, if you've been with me for a while and you're struggling to hit your goals, if you've been with me for a while and you're trying to find all these trades you see other people doing, this is a great refocus plan. This is a great, let me slow it down and let me look for the best of the best and let me get my mind right before I start chasing everything. I've seen a lot of people stray and they come back and they kind of reel themselves in with this plan, guys. And it all is based off of entries. It's all based off of the best entry, getting into the market at the absolute best spot because it creates manageable trades. So once you're comfortable with your entries, we got to do something with that great entry. So there's a mechanical management plan. It's very simple. It's nothing more than if then. And it eliminates emotion and hope and fear if you stick to it. Because if you enter the market at the best of the best spot, if you enter the market where it's most likely to continue at that area inside of favorable large triggers, then your stop goes where the market shouldn't. Then your stop goes outside of that window of opportunity. And I'm going to tell you guys, there's nothing more frustrating. Let me take a picture of the picture here. There is nothing more frustrating than getting into the market at the absolute best spot and then getting yourself stopped out just below resistance inside of favorable large triggers because it was an arbitrary number, because it was a number that said, oh, my risk is 10 ticks. If you are committed to a number rather than where the market shouldn't go, your number is a BS number, guys. It's a fear number. I sure will, Joel. So enter where the market is most likely to continue, and your stop is where the market shouldn't go, outside of that window of opportunity. And there's the KISS plan in the room for you. Once you get in, there's only two options. Either your stop gets hit or the market decides to give you a reversal bar in the direction. So we go back to if then, right? The elimination of opinion. If the market gives you a reversal bar, then you will reduce your risk a tick or two above or below the reversal bar in the direction of your trade. And at this point, there's nothing to do. You're either stopped out or your first target gets hit, guys. And you don't know what's going to happen. You can't predict what's going to happen. The market doesn't care what you want to have happen, but you're trading a pattern with advantages. You're trading a pattern that's been proven to win more than it loses. So you accept the potential for loss because you know more often than not the potential for victory is there. And sure enough, if it hits your first target, we only put it $100 off in the distance, guys. And this is done for a very specific reason, and it has nothing to do with $100 being the best target. I can tell you that right now. It has everything to do with quick profits. It has everything to do with the feeling of success. It has everything to do with getting in and getting out and getting paid and feeling good and getting that dopamine and that serotonin. And then you move your stop to break even, which isn't always the best idea. And it's going to get hit a lot. But now you have no risk. You have $100 in the bank and you have absolutely no risk. And that makes it easier for you to remember that the large chart led the way. It makes it easier for you to remember that it was a large chart that told you to go short, and it was a large chart that said that there was nothing in the way. It was a large chart that had all that momentum. Let's let the large chart do its thing with no risk and push us to our second target. And if it makes it, this is pretty cool. It's only $200 in the distance. Guys, that's a $300 trade. And I'm going to tell you right now, $300 on a two lot is pretty outstanding. If that's all you do, that's a $1,500 week or a $6,000 month or a $72,000 year. And guys, that pays for your new Corvette, right? That pays for the mortgage on your $500,000 house, which isn't a lot of house these days. But if you turn that 2 lot into a 4 lot with the exact same plan and you have the exact same results, now you're at 144,000. And guys, that just keeps compounding. It's not more trades, it's not catching all the moves, it's catching the best moves and minimizing risk. And that's kind of what the high probability trend trade is designed to do. That's what the KISS plan is designed to do. And then the second half of the KISS plan is the most lost trade in trader history, the 50-50 trade, the area that has the potential to break. And this gives you a plan for maximizing your success with it. And it's kind of cool because we watched it yesterday, and this kept most of you out of losers, and it put some of you into winners, guys. But it all stems around the idea that it is not a perfect trade. It is not a high probability trend trade because you don't know if the area is going to break or not. So you insist because your money's worth it on no divergence on the small chart, on strong triggers on the small chart, on a tiny window of opportunity on the small chart, making sure that the market's coming from a good top or bottom on the large chart. Guys, this is the best of the best, and I want you to see this right here. One area not broken. Not 2, 3, 4, 5 areas. No, you can't stay in the gym too long. Good morning. Um, One area not broken. And guys, if you focus on this initially as you branch outside of the high probability trend trade, this is your best chance of success. But once again, through simulation, study, class feedback, and continuous practice, you're probably going to alter this and change your approach a little bit, which is cool. I want to see that. And I want to see your pictures as you grow beyond it. And I want you to tell me why you did what you did. Because what I've found for most users is when advantages aren't present, your ability to recognize that that advantage is no longer there makes it easier to manage. It makes it easier for you to not rely on hope. You can say, well, I don't have the best momentum, so I'm going to watch for those divergences for an exit, or I don't have a clear path. I'm going to look for those losses of momentum to make sure that I don't hold too long. My entry area isn't perfect. I'm going to look for some sort of confirmation before I ever enter the market. And guys, if you just make that your focus, if a termination creates a full reversal, the full reversal gives you odds favorable momentum. Notice that there's one area not broken. This is a 50-50 trade. 50% of my triggers are through, 50% are not. If I got a reversal bar, I can identify that my lowest point of resistance inside of favorable large triggers is a midband. My highest point is resistance. And if this reversal bar prints, this becomes my window of opportunity. This becomes the point where the market is most likely to continue if this area is going to break. Guys, give me a Y in the room if you're with me. That's how quickly analysis is capable of happening once you become a chart reader. Here I have a clear path. I don't have the best momentum, but I did have an area inside of favorable large triggers, medium probability, which means that this divergence probably gives me a reason to exit the trade because it's not high probability. I don't have the best momentum pushing me down. Does that make sense? There's a great example of a medium probability trade. Not odds favorable. I do have a clear path, and I did have resistance inside of favorable large triggers. So if you go back to the equation, I'm 2 out of 3, which means that I have to manage this trade assertively if things begin to change. Pretty cool, right? We're watching it live, guys. A little bit of overrun. Everything says down. The momentum is its strongest, and I am a couple ticks away from a clear path. And if I get a reversal bar, once again, my area of opportunity, the point where the market is likely to continue, falls somewhere in this range right here, from my lowest point of resistance to my highest point of resistance inside of favorable large triggers. That's the reanalysis. There's divergence on a 50-50 trade. If you're following the KISS plan, this says that's not your trade. Gary, that's a great looking car. I just don't think I could get in and out of them, to be honest with you. I like the new ones. I like the mid-engine. I don't think my back would let me get in and out of those anymore, though. I've looked at them. I got a big off the ground Subaru. It's easy for me to get in and out of. And then guys, if I take this picture right here, I want you to see something. And I take the KISS plan. And this is, I think, very much one of the advantages of what we do, and certainly the advantage of having a plan, is I can take this picture and I can take this spreadsheet. If you're using Snagit, this is pretty cool. Let's put it up against it. Let's make this so we can see it. Odds favorable momentum on the large chart. Absolutely. Smalls outside of the large on the 5-1 without question. No divergence on the 5-1. Guys, do you see that loss of momentum right there? Whoops, I just got booted. Give me 1 second, guys. I'll come back. I know you can still hear me. Give me just a minute and I will get back. I don't know why it does this every now and then. Maybe it's the holiday. Getting close, getting close. Hold on. Almost there. Don't panic. I got you guys. There we go. I should be back. Am I back? Can you guys hear me? All good? Am I from a good top or bottom on the 13-2? Guys, honestly, I'm not. Because my triggers started to get through. Whoops. So that's a no. So I'm 50% on the checklist and divergence. So even my little other disclaimer says don't. And so far it's pushed right beyond the bottom of the window. And we'll see what happens. It may hold, it may not. But my checklist said no, right? My checklist said don't do it. And then Gary, I don't know anything about gaps or opens, but it seems to me the open on NASDAQ was right here. Yep, right to Fibonacci resistance, and it pushed all the way back down. Hopefully you guys made some money on it. And if you didn't, that's okay. It just wasn't yours to have. But support became resistance, and the market continued down. Support became resistance, the market continued down. Tail end of odds favorable, there's a tail, and everything came from a termination condition that created a full reversal. Guys, this is the power of Nexgen. With all that up, you knew where it had the potential to stop, and your trigger lines told the story. And news, okay, let's see what happens on news, guys. Thanks, Phil. So guys, watch the NASDAQ, watch the news. I'm going to go take 5 minutes and stretch my legs. When I come back, we're going to start looking at your pictures, and we're going to talk about anything and everything that you guys want to talk about. I'll be back in just a few minutes. We are back. Looks like there was a little reaction to news there. Kind of cool that it came right off of Fibonacci resistance, didn't it? Man, I wonder if we had any indication that the market may have stopped there. I feel like we did. What are you wondering, Joel? On crude oil? That's it right there. I'll put the picture in the room for you. And this is a great lesson, guys. The checklist is designed to optimize your chances of success. It's designed to put you in the absolute best of the best spot. It doesn't mean that if the checklist isn't met, the market won't do what you thought it was going to do. It means that you've given up your advantage. And trading the market is very much about advantages, right? So if I'm following the checklist, that's not my trade. Guys, give me a Y in the room if that makes sense to you. If I'm following my plan, this isn't my trade. And then the second half of that statement is that if the market does this, I have to be okay with it. I have to say, it's cool. That wasn't my trade. And this is what gets people in trouble because they're like, oh man, that one worked. So I'm going to take this one and they're going to get stopped out. And I'm going to take this one and they're going to get stopped out. And I'm going to take this one and they're going to get stopped out. And I'm going to take this one and they're going to get stopped out. Where's another one? Take this one and I'm going to get stopped out. I'm going to take this one and I'm going to get stopped out. Guys, do you see how many 50-50 trades didn't work? And then this one is going to get you to adjust your whole plan because your brain couldn't care less about the 50 losers that you took. It only remembers, for whatever reason, the winner that you missed. And I really hope that makes sense to you guys. As you grow with the software, guys, you're going to get to a point to where you're going to be able to make some decisions, right? My decision on this one, if I were the one trading it, is I would say this is a 50-50 trade. And it does have divergence. But it's coming off of fibs, even if there was a little bit of overrun. I like that. I have strong triggers. And I know through my study that one divergence with really strong triggers is likely to take out that previous pivot, which means that if I have an area for entry somewhere just beyond that pivot inside of favorable large triggers, that becomes an acceptable trade for me. But I'm using this off of an overall chart read, which means that I don't get into the market here. I get into the market here or I take no trade at all. And maybe even I wait for a reversal bar to enter that market in order to take it down. Does that make sense to everybody? Because you are not bound to the KISS plan. You are not shackled to it. But until you can do all of these reads in a moment's notice, it's going to help optimize your chances of success. And the problem is people try to break out of it before they're good at reading their charts. So I'm going to go to the top of the room, guys, and we're going to start looking at pictures. Gary put in a lot of chart reading today, so we're just going to go through and we're going to read charts for a little bit. Whoops, something went wrong. And we're just going to talk about the advantages, right? Or what isn't there. And this is a great one. Termination condition. What an awesome look. It's a termination condition, therefore, no long trades. Midband could act as resistance and monkeys could fly out of my butt, right? Guys, try to avoid the idea of predicting what may happen. Talk about what is happening and whether or not your rules are met. Termination, same picture, same picture. Second divergence with the HVA. Yeah, but there's nowhere to go. Look at all those triggers. Gary, did you notice this morning? All those triggers above the one-to-ones. And I think a lot of times there's an incomplete thought. Um, did you notice all the triggers above the one-to-ones on the large chart? You've got a lot of annotations on the other one. And this is not necessarily for you, Gary, but for everybody. Let me show you. And that was right when I woke up this morning. Let me see if I can find the picture. Oh my goodness. I take so many pictures. That's not it. This was my same thought on it. Just woke up, gonna let it marinate. There's an HVA here, and it's messy. It's everything above support and everything below resistance. And I couldn't find an advantage. And if I can't find an advantage, guys, there's probably not one. Um, Comes back to support, right? Small's inside the large, it's support, no trade, exactly. It's weak, it's into support, and it's been a crazy uptrend and then coming through. Both triggers crossed up. Why no trade? Rules not met over here. So Gary, I love the annotation. I want you to start this. So what? Both triggers cross up, no trade. So what? Why? Right? Is it no trade because of your gut? Is it no trade because of the rules? Green HVA form now a struggle between buyers and sellers. I get it. It's a great termination, right? Coming off of support, coming off of support, coming up, HVA. And this is some of the stuff that you're going to learn in John's classes. You're going to think differently about termination conditions a little bit. But if you always ask yourself, so what? What's it mean? Why am I typing what I type? What effect does it have on my plan? What effect does it have on my decision making? What you're going to find is you're going to begin to have more complete thoughts. You're going to begin to have more thoughts that work their way towards the recognition of advantages. And you didn't take the trade, just charting. And that's cool, right? And Gary, I'm going to tell you right now, you're about to have your mind blown because ultimately, with what you're about to learn, you create an opportunity based on the overall trend and a couple other factors to take that trade. That's what I've been studying. I hope you're excited about it because it's pretty outstanding. Top step, reminding you the hours. I like that. Forex calendar. We talked about that. We got to see news break and go. I'm not sure what's going on over here, but that market's cranking. Whoops. And then support to resistance. There's your HVA. That was your long, Gary. When you get two HVAs, are we talking about this picture right here? Which one? Was there a picture that you're talking about, or is that just a general? You hate two HVAs. Because what you're going to find is which HVA is important. Is this HVA with the large triggers way above it important? Or is this HVA right next to the ultimate termination condition important? Does that make sense? And this is what you're going to be able to discern. And this is why too much information can be bad. Is is this higher divergence off of support, haven't reached the next area with an HVA, large triggers up? Is this more important than this pivot stop out on a small chart? And you're going to be able to begin to discern that and turn these advantages. And it's just chart reading, and it just takes time to get in there. But very often we start very basic, right? I know I did. I still play a very basic game very often. Is is I start asking myself from a bad bottom, is this support going to be more powerful than this resistance, right? I'm not trading into resistance. Is this the end of the move, multiple divergences, or is this just the push up? And you begin to weigh out, what are my advantages, what are my disadvantages? What's giving me something that makes me look at what I want to trade, and what's taking that away from me? And you'll begin to recognize what areas become more important as you go through. It's pretty cool. It's fun to be able to do that. Chart reading does that to you, does that for you, right? And there's that termination, and you get a loss of momentum, and stuff starts to pull down. Definitely not an HVA, right? Because everything is up on your range chart. It's just too soon. The triggers are still strong. It's just too soon. There's tons of support. Just too soon. It takes a minute sometimes. All right, Joel. Odds favorable, clear path, perfect entry, cost of doing business. Great trade, Joel. Just didn't work. Beautiful trade. Perfect rules-based trade. Didn't work. And then Cav. I'm buying glasses just for you. Everything is up. And Cav says, well, I can go up with that. And then I'll exit up here. Beautiful. You're just taking another piece with momentum out of the trend trade. Nice job, Cav. I like that trade. That's the Ron C trade. And the idea behind it isn't that you hope forever, right? When divergence prints, momentum in, loss of momentum out, Cav. This has paid huge dividends for people that started with a momentum trade and still weren't making money. Momentum in, loss of momentum out. And divergence with weak triggers, that is such a loss of momentum. And I know that you were hoping, right? Why not get paid and look for the next opportunity? I think that you're going to find that as you begin to move forward. One tick from your second target, even more so. And guys, I'm not the greatest trader in the world. Um, but I begin incorporating things. When I start getting close to my areas, because they're just areas, I'm not willing to give that much back. I'm just not willing. And I think you got in somewhere over here. This divergence prints, I'm getting the hell out of the trade. My job's to make money, right? And that was $200. Well, but there's got to be reasons, Cav. There's got to be reasons to stay in for max profit. Let's look at both charts next to each other. Accidentally closed it out. Hold on just one second. It's one thing to stay in for max profit. It's another thing to stay in hoping. So you don't have strong triggers. We're in a great uptrend, without a doubt. But look at how long it's been going, right? Oh my gosh. So these weak triggers, coupled with weak triggers, coupled with divergence, no, it just wasn't yours. Take what the market gives you, right? I love this. This is beautiful. And you had every advantage, everything going up, everything clear. And this is where your advantage goes away on a momentum style trade. And it's a balance. It really is. Have a reason. That's the biggest thing, is have a reason. If price gets below these triggers, it's likely to push lower. It did here as well, right? It did the exact same thing here. Look at how far it pushed. Look at how far it pushed. And you begin to see this. It's just momentum in, loss of momentum out. If this were a high probability trend trade, Cav, right? And you were in it because of the trend trade and you had odds favorable momentum on the large chart, I'd hold that one all day long. But here, it's just a sustained trend and there's such a big gap back. So I think it's a beautiful trade. I just want to see you make as much as you can possibly make. Makes me happy when you guys have great winners. Just always have a reason, I guess is what I'm saying. And it's okay to tighten up. Termination. Everything rolls. And then Gary, pretty low there. Missed your HVA. And you let it roll and you take a momentum style and you take it down to the fib. Nice job. Nice job. And then Joel, let's see what you did, my friend. Joel, 50-50. Well, nope. It was right into the termination, right? So you said, it's just not my trade. Because what if that termination stops things? Joel, I think that's great recognition of a termination condition. And I support you not taking it. And then Gary went premature, got out early, and missed the move. Yep. All you had to do is wait for it to break and pull back with all that momentum, right, Gary? Just a little bit of patience. Little bit of patience. You gotta believe there's going to be a bounce there. But you let everything get back in line with it. You let everything start winning, and then you exited. Like it went through. You sat through all the trouble, and then once everything finally agreed, that's where you got out. Not commenting on it, just observation. Everything's down. You wait for it to roll and down. Nice job. Large chart leads the way. I love that. And this is that great little, I'm not exactly sure. And Gary, you're missing synthetics on your 13. Don't know exactly where it's going to happen, but I'm not going to fight the upward strength, so I'll let the small triggers roll. Did you mean to not have synthetics, Gary? And then Cav, pull back to the triggers on the 5-1. Man, this is your trade, isn't it? Beautiful. You don't let divergence scare you out and take it all the way down. And Cav, this is one of those ones, I think. You've got all that protection, right? Large chart says down, clear path. You know that we shouldn't get much above this. It's easy to keep your stop in place here where the market shouldn't go because you've got that very concrete line. It's when you run out of concrete lines, I think that it makes it a little harder. Great picture, dude. Great trade. And then Joel. Beautiful. Odds favorable, 50-50. You take it. You had no divergence. Look at you showing off. Perfect entry. What got you out, Joel? It fit your rules, didn't it? Oh, you heard someone say news? Yeah, okay. That's a great reason. You see how you didn't have to, though, right? You didn't get a reversal bar until here. Beautiful trade, Joel. Beautiful trade. And then Cav. Ooh, odds favorable into a termination condition. And it just doesn't work out, huh? Darn those termination conditions. I love a pivot stop out at the bottom. I hate a big fat red fib though, with all the triggers below. No, and this one is certainly a lot lower probability, even without the divergence. Um, this is one of those ones, Cav, where I love a little confirmation. Maybe a reversal bar on the correct side, something that says I know that I'm fighting it. I'm not going to hope. I'm not going to fight those small triggers, especially on Nasdaq. Let me get in on the correct side of the small triggers and give myself at least a fighting chance. Does that make sense? Those small triggers become a great indication of that immediate momentum, and the Nasdaq tends to run with it. It's a little different animal. Um, have you gone through? I can't. I know that we've talked about it so much with so many different people. Have you ever looked at the little Nasdaq section on the spreadsheet that I give you guys every day? Uh, I'll tell you what. I've got one more picture, and then let's go through it. Let's have some fun today, guys. We'll talk about Nasdaq, and then there you go. There's that momentum again, right? All the momentum, everything says up. You know you're trading into potential trouble, but look at the trigger lines. They say, come on, Cav, let's go get some. Nice trade. I like what you did there. All right, you ready to have your mind blown on Nasdaq, Cav? This is gonna eliminate probably 50% of your losers. How do I know? Because I took all the losers in Nasdaq. I took every one of them. And I used my spreadsheet, and I went back and I started studying, and this is what we came up with, and you're going to like this. So the large chart rules don't change, right? Everything says up, everything says clear path, the momentum is amazing. When I get a reversal bar on my smaller, faster chart, when I get a reversal bar on my entry chart, I'm looking at the relationship of the small triggers to the reversal bar marker. Um, Where are my small triggers? When I get down here to the area, if they are above my reversal bar marker, I'm in. I'm in at the area. If they are below my reversal bar marker, I'm going to sit on my hands and I'm going to wait for that next conservative entry, which means that, and let me pull this over here. If I get to this mid band and I'm thinking more up, boom, right below you, brother. Those small triggers are too close. They're too strong. I stay out of the trade. I don't just get into the trade. I wait. Here, everything says down, right? Everything's going. Cav, look at how strong the small triggers are coming up. And they behave as support when they do this. So if you wait for the close on the correct side, large chart still leads the way. It keeps me from getting run over. And there's a little cost to confirmation there, um, but it helps. And then the other side, this one says never fight smalls. As the market comes down and I'm looking for that long, see how strong the small triggers are against it when I get to my area? I'm just waiting. It's this little piece of patience, man. It paid huge dividends for me. And then the other side of that is if I get to the area and the small triggers are above the reversal bar marker, I go at the area. I'm in at the area because it's likely to close that gap, and it gives me established risk, it gives me minimal risk, and gets me in. And then Joel, absolutely I will. I'll use a stop order to get in because my stop order is faster than my hand will ever be. Price pulls back. Look how far away the small triggers are. Could have been in at the area with this look. Easy peasy. So Cav, go through those, man. Take a look at them. If you have any questions, let me know. Um, but that was a lot of my personal research that I did on it, and it helped me tremendously. And then Carl, strong trend, everything says up. You see the three divergences and you let it sort itself out, right? Where was your entry? Um, a pink HVA line isn't really a great spot, Carl, because that's where the sellers wanted to push down more. You take your entry. I think you just kind of got lucky there. You're behind one to ones. It just overran a little bit because of the weakness. Um, and then it goes. Once you get that, you're good to go. And then the other potential entry, Carl, I don't know. What does your plan say? Do you have a plan for stops and targets? Whoops. Let's look at it. Which HVA line? So this HVA line right here, let's talk about what it means. This HVA line right here, let me make it white. Come on now. There we go. This is where the sellers said they want to sell more. This HVA line is where the sellers said they want to sell more, right? So there's the fight right there. There's people that would have been short off of these lines because of the termination stuff coming over. Where you get in, and you get in at the HVA line with everything up, I like your entry. But at this point where you get in, you've got to wait for a reversal bar. Um, and I don't know where I would put my stop here, to be honest with you, because I've got flat large triggers. My mid band is below it. I just had three divergences. I have weak triggers. And then divergence from my range chart makes me feel like it might push it lower. I think your stop is where it had to be, man. It had to be below those one to ones, something to protect you. Does that make sense? And then once it starts going, there's another way to do it too. When it's wonky like this, you can wait for the reversal bar to get you in, which gives you established risk, right? And there's still tons of room to get to your target. So if you wait for the reversal bar, that's one possibility. The second is let it get above support and then pull back, maybe right there, or wait for market flow confirmation. And I think that the point on this is that this isn't the best entry look because your larger flat, see how they're lifeless? You really don't have any areas inside of the triggers. There's support right up top. I don't know, Joel. Take a picture of it. I'm not sure, to be honest with you. So there's where that because the entry is a little wonky, because the momentum isn't necessarily ideal, right? It's a strong trend for sure. You're getting above, but it's not odds favorable. It's a little weak here. It's not that oh my gosh rock star entry like it is down here. This is Carl where a little confirmation I think pays huge dividends. And your entry would have been the exact same entry price, right? But without having to suffer the down. Does that make sense? I hope. I'm trying to just kind of work through it. When it's not perfect, I love confirmation. Um, Whether it's market flow confirmation with all the triggers going up, right? Or so great picture, dude. Great trade. I love it. And then you see how everything begins to strengthen. Smalls up, large up, odds favorable. Um, get that fib, brother. That's So, Cav, this is where holding for bigger moves makes sense, right? Everything is cranking up. Everything's cranking up. Odds favorable. That's where you look for that fib to get hit. Great picture, Carl. And then Gary, termination, straight to support. I can't see your entry. And you get up after market flow confirmation to close the gap to the triggers, and you take it all the way up to resistance. Gary, that's beautiful. And then Cav, 50-50, odds favorable, one divergence, perfect entry, out at trouble. I love everything about it. That's how you get paid. Can I read at 1027 on your picture? Let me figure out where 1027 is. 1027 isn't on your picture. Oh, the ES. Let's go look. Oh, 1027. Oh, sorry. My bad, Carl. So let's see what we have. We have a weak bottom. The smalls are up. I'm going to start on your large chart. I'm not coming from a termination condition. My smalls are eking their head above support, and it's stretched all the way up to 46, but my large triggers are below the reversal bar marker. Do you see that giant gap, Carl? Where the large triggers are below the reversal bar marker? That's your gap theory, especially with a fib in between it. So when you pull back, once again, no areas inside of favorable large triggers, and you have a bad bottom, and the small triggers have barely made it, and the large triggers are a full bar away. It's an HVA trade from this HVA? Okay. Rule number one, good top or bottom. Reversals or breakouts at Fibonacci are preferable. Make sure the T3 trigger lines did not break beyond the area. It is extremely important that you pay attention to trigger line location when doing this trade. That's the part that we missed, Carl, is you're not coming from a termination condition. You're coming, and that's really common. And I'm telling you from experience, it's so easy to get married to these lines, right? It's so easy to get married to these lines because they're neat. But and I know I'm guilty of it. I'm so guilty of it. You got to make sure that your rules are met first. You got to make sure that your rules are solid before you try to use that market flow chart. But once your rules are good, right? Once I have a termination that creates a full reversal that gives me odds favorable, my triggers are getting above the area. That's where we play the hell or high water game, right? That's where there's absolutely nothing could keep me out of this one. Fire away, DJ. Hey, Carl, I think that the idea was right. Just that one little tick on the execution, right? Just that one little piece on the execution. But it's awesome that you posted it because now you can go back and annotate it. And I guarantee next time you look for an HVA, you're going to make sure that you have that good bottom. So let's see just for grins. And this one just didn't quite get there. But do you see how the termination, the triggers roll? I would have bought the ever-loving snot out of that HVA line, Carl, because of this. Pretty cool. Um, And guys, this is it. The more you post, the more we talk. The more we talk, the better you get. The better you get, the easier it becomes. Um, is it better to come from a top or bottom? I know you have to come from both in the rules. Doesn't matter, DJ. That's a great question. Couldn't care less. Um, and I could literally change the verbiage to say come from a term that reverses the market and made it without direction, right? And can I talk about why? Let me talk about why. And I think that you're going to dig this whole idea. And let me find one go in both directions in the same picture. Um, this is a good example. I love that question, DJ. I really do. Because well, one thing it reminds us that we can make money going both ways, right? So the sellers are pushing, and everything's going down, and they reach the decision-making point, right? What do the triggers say about the decision-making point? There's certainly a bias for the short. Do you see it, DJ? And that one ends up breaking, and then we get to the next decision-making point, and the triggers are still kind of outside. And that momentum, we still create a bounce, but the market continues down. And then we get to the next decision-making point, and your triggers can't do much of anything. Now they're weak, and now we have that termination, right? And that termination takes us to the next decision point, and the triggers say don't go long, and you can't go short. And then they pull back to support, and all of the triggers stay above. And this is awesome because this says, hey, we're probably going to reverse and go the other way. And that does, sure enough, all the way to the next decision-making point. So it doesn't matter to me if the point is low or high, knowing exactly where these decisions are made and then gauging the reaction off of it creates an advantage. And this came from resistance up top as well. So what you find is whether it's a low or a high, when price reverses, when no triggers go through, it becomes a real powerful concept. And those are the ones because decisions were made. And this is typically where the sellers ran out of juice. They took their profits, and the buyers, or the buyers said, okay, that's it. That's as far as we needed to go. And the sellers say, well, cool, it's our turn. Let's push down. We'll break this decision point with all the momentum. And when we get here, the buyer said, oh, you know what? We really wanted it to go up again. You can tell by the triggers. You knew not to go short, and it sets you up for the potential long. So I love everything about that question. Don't overthink it. Just let it be a termination that creates a full reversal. Know that a decision was made, and it was a strong enough decision to reverse the market. And then Gary, termination. You're looking for the HVA. All right. Smalls roll, large haven't. It's pulling back. Not quite a termination. Sure, DJ. Because Gary, it's not coming from a fib. It's not coming from yellow one-to-ones. It's not coming. There's those little purple ones. But notice that your large triggers are still way up there, and it may reverse from there. But that's not my best termination. And you get that indecision. And then once it comes back and closes the gap to the large triggers, now we have a little extra confirmation. Does that make sense, Gary? Because it's not a great termination, we can expect a little retest at least, and then this is the one, and they still can't get through support. And guys, it is the holidays, remember that. Let it be perfect on the holidays. And sure enough, they ran right over it. Gap theory works like a champ, doesn't it? Gary, do you see how just the gap theory alone keeps you out of the trade? The termination alone keeps you out of the trade. So when you couple that blue fib with the gap theory, just no reason ever. And now we come up and retest, and that's probably going to be the one that pushes you. Notice how this, both are red, both are red, very weak triggers, totally different look. And that's the one that sends you down into support. Good stuff. All right, DJ, let's talk about momentum. Did you have a specific question or you just want me to ramble for a minute? Because I'm cool with either. And then once again, let's use just trigger lines. Whoops. Dang it, I put the wrong one on there. I'm going to use nothing but trigger lines, DJ. And we're just going to talk about it. And I think that this is a great drill. As you learn, cool. I love a little podcast rambling. You know me well. I appreciate that. And I just screwed up a little bit, but we're going to we'll use the NASDAQ because there's so much movement. Sorry. All right. Let me put just trigger lines on it. All right, here we go. Two triggers only. And guys, this is something you can do. You have the template for two triggers only. This is great study. Here we go. Son of a gun. Templates. Load. Two triggers only. Okay, let's make this work. And I don't know why my triggers only template isn't working. Let me try it on a different market. Hold on just one second, DJ. Sorry. I'm not sure why it's having challenges. I may have to go build a new one. But I'll tell you what, we'll start with why momentum is important, why strong triggers are important, right? It has everything to do with the idea that when they're strong, son of a bitch, pardon my French. All right, so we're going to do it with fibs then. Let's see if a different template works. I'm going to do two triggers and divergences only. We'll see if this one works. Holy smokes, I just crashed NinjaTrader 7. That's never been done, guys. That's amazing. I just crashed NinjaTrader 7. So let's do this. Let's take just a couple minutes while I bring this back up. I'm going to go mic silence for a second, guys. Talk amongst yourselves, and we'll see if things load back up. That was crazy. Got my S&P coming back up right now. That was wild. So let's go to pictures then while this loads. I know, right? We can't have nice things. Oh, you know what? Let's see what I have on the spreadsheet too. But let's start with odds favorable momentum. I've got a box called momentum here. Let's see what it looks like. Nope, that's just momentum trade. Cheering section. All right, fingers crossed, DJ. I can't believe I crashed NinjaTrader 7. That's like impossible to do. Nope, my triggers aren't working. I'm going to try and build a new chart with nothing but trigger lines on it. We'll see if that works. Almost there. I apologize for the technical difficulties, guys. Getting tired up way too early. Sounds good. Gary, good luck at the doctor. Enjoy your Thanksgiving, and we'll see you on Monday. Happy holidays. Man, I'll tell you what, I have politely declined two shoulder surgeries in my life. Um, Unfortunately, I'm not sure third time's going to be a charm. I think I separated my shoulder about a year and a half ago, and I can't get it to heal. So I may be getting something fixed this year, which stinks, but it is what it is. When you're a day trader, you can have busted shoulders. You have a prosthetic right shoulder? Cool. I didn't even know that was a thing. All right, DJ, let's start with the lesson on momentum while I'm trying to get stuff to load up. My Ninja Trader's going crazy. Maybe it's just the holidays. Not as good as the original. No, nothing's ever as good as OEM parts. So DJ, are you cool with the idea that the separation between the two creates an advantage? That's the first step, right? And this picture is a great picture of it. Let me just take the whole screen here. When I have odds favorable momentum, this is why it's rule number one, guys. When I have odds favorable momentum, I have a market that is likely to continue in the direction of the trend. Um, I actually crashed my Ninja a second time, so I'm going to go do a little clean out. When I have separation between the small and large, I have a market that's likely to push in the direction of the trend. When I have that gap between the small and the large, it's the absolute best of the best, guys. Titanium hip, not the same as the original. No. I'll tell you what, I've got steel rods and screws in my lower back, and it is nothing like how my back was when it was young. It's better than it was when it was really bad. Um, Here we go. I'm reloading yet again. We're going to see if that works. All right, so DJ, this is your lesson. It's the separation between small and large. It is the gap between the two. That's odds favorable momentum. And I want you to see what happens with odds favorable momentum. Areas break. Waiting for a memory transplant. I had one, Cav, but I missed the appointment. I forgot about it. What does odds favorable momentum do? It breaks areas. What does odds favorable momentum do? It pushes in direction of trend, right? This is what odds favorable momentum does to you guys. This is the advantage. This is anything can happen triggers. And we'll go ahead and draw it to both. I think we just summed it up in one. What happens on anything can happen triggers? What does that do for you or to you? Whoops, wrong one. Anything can happen triggers. This is a big one for you guys that try to get in early. It creates deeper retracements. Why does it create deeper retracements? Because the small crowd has less to fight. What else does it do? It can precede reversals. All right, so DJ, this is John, meat going to the smoker, you have to open a beer. I love it. I got to go fight the grocery store one time. I don't have anything in the house for dinner. So DJ, this is odds favorable momentum in like one of the most, let me make it a little different so that you can see it. Oh, that's not it. Sorry. There we go. So we know exactly what we're looking at here. So we're going to do the fill yellow down here. We're going to do the font black. So odds favorable momentum. Odds favorable momentum breaks areas. Odds favorable momentum pushes in the direction of the trend. Anything can happen triggers, weak triggers, creates steeper retracements. At a fib, it may indicate a reversal. And then once again, there's that odds favorable again, and off it goes. And if you take this very basic understanding of what this loss of momentum does, think about when you're looking for an entry. If I have anything can happen triggers, right? And I have 3 spots inside of favorable large triggers, doesn't it make sense that without the momentum, without something creating resistance for the small crowd, it may push to that higher area? Or if I have odds favorable momentum, look how tiny the tail is. These are one of the ways that you're going to take the advantages. You're going to take the advantage of momentum and you're going to incorporate it into things, guys. If you don't have a lot of momentum, and let's go see if we can find a live example. If I don't have a lot of momentum, let's look at 10 o'clock. I don't have any areas inside of favorable large triggers. I'm expecting a deeper retracement. And sure enough, it retraced all the way to resistance. Carl, there's your confirmation with a reversal bar when it's not perfect. But do you see how the weakness pushes it further up? The weakness into the area, you can see it through divergences. 1, 2, 3 divergences print. No triggers break through. And it sets you up for this one with a tiny little stab back. It is into a fib. And guys, you'll get to the point where you start taking this chance without divergent strong triggers and a little push. But you kind of see it all day long. And if you look at the spreadsheet, this one's called losing momentum on the 13-2, deeper push down. Losing momentum, deeper push down. You can begin to anticipate, you can begin to expect. When is it not appropriate to get in at the top of the window, at the bottom of the window? When you don't have the momentum on the large chart, when divergences start printing on the smaller chart. Does that make sense, everybody? That's an outstanding lesson. Three divergences in the same price range said don't take that long. Did anybody follow rules? 3 divergences in the same price range say don't do it, don't take it, don't try it, it's probably not going to work. Nexgen users said, oh, thank goodness 101 class. And now it's going the other direction. And guys, we're probably at that point the day before a holiday. Oh, I don't have any other workspaces open. I forgot I crashed everything. We'll look at crude oil real quick. But we're getting to that point, guys, where it's holiday trading, where it is everybody's gone, everybody's with their families, everybody's doing their thing. I'm going to bring up crude oil real quick. I've lost a lot of money trying to trade holidays. I'm not saying that you shouldn't. I would never tell people what to do. I shut down at 7:30 a.m. this morning. Cav, take care, man. Enjoy it. Weak triggers, bigger push. 50-50, bigger push. Weak triggers, bigger push. Right into a termination. There's your push. Isn't that crazy? If you go back and look at it, guys, do you start to see it? Pivot stop out precedes the reversal. This much momentum from a pivot stop out breaks right through it. And then we get the fight right to the same area. How many times are they going to test that area? I don't know. But doesn't that look like a fight you didn't have to be in? Does to me. Does to me. Guys, I'm going to take 5 minutes. When I come back, we're going to see if you guys have any stuff to talk about. If not, we're going to send you off to Turkeyville. DJ, did that help a little bit? Did I post that picture in the room that I took? I didn't. Let me post that in there. I like that picture. I'm going to actually probably use this one to teach a class with. Expectations on that momentum, right? Here you go. I'm telling you guys, Carl, you too, when you start to recognize these patterns, when you start to visually see them, um, it's crazy how it changes your perspective of the market. It's crazy how it's so much easier to go from hope to this pragmatic idea that, man, my triggers are weak, it may push higher. My triggers are weak, this could be the one that reverses it. My triggers are strong, probably going to smash this stuff. And you know that it's never guaranteed, right? It's never a guarantee that this red line is going to stop the market. But it is pretty solid that it's going to create a bounce. How come? Because that's where decisions are made. It's exactly where decisions are made. I'm going to take 5 minutes. Guys, I'll be back and then we'll finish strong. Back in just a few.